Hey guys, Pratheesh here. So in today's video, we'll take a short analysis of Nifty versus Bank Nifty and what is likely to happen for the next session. Okay, so if you watched my previous video on daily analysis daily trade plan, I have mentioned that Nifty, what I have been mentioning is that we have been mentioning that this particular composite, okay, 5 or 6 day composite were there actually, and this particular profile, we got a clean acceptance inside the tail of a composite. So you have this composite P. They had this composite P. Then market breakout, and then after a round trip, market slowly came back, and we got a clean acceptance inside this tail of this composite. Okay, once we got a dip, but immediately bulls responded here. And they shifted higher. But at this point of time, we got to complete a clean acceptance. That means good value was there in the tail. So whenever you see that tail is getting accepted, then this is a kind of weakness in the market. So we got a clean acceptance of the tail, and followed by you get another gap down. So our expectation was that as long as we are holding this particular band of, we say this particular 480, okay. That was our bias, initial bias was that. So we don't know whether we'll get a gap up or gap down opening, but most probably follow through on the downside is the possibility. Okay. The highest possibility is that you may get a follow through on the downside, but we don't know whether that will happen via a drive or gap. That is not guaranteed. You cannot predict that actually. So what we can assume is that as long as this POC and this value area high, this band, that is 450, 480 band, as long as this holds, the bias is towards the downside. So how long this can come is what you mentioned, that we have another 3-day composite over here, and the tail of the composite comes around this particular level, somewhere very close to 22,200, somewhere around 22,200 to somewhere around 22,120. So we have mentioned that this will be the next support. That means this particular resistance band they need to hold, and if you get a follow through, probably this band will provide some kind of support. So market opened inside this band, and all of a sudden there was immediate responsive buying happening up from the tail of this composite. They went up. Okay, initially it was a kind of a short covering profile. Say like A period, it opened, went down, responsive buyers came in, they pushed the price higher, and you are making something like this. So it means a kind of a short covering pattern was forming early in the day. So like for the first 2 hours or 2.5 hours, 3 hours, you are doing a kind of short covering. So short covering, as I told you, that it's a kind of a weaker structure as long as you don't get any fresh business above the short covering profile. So this is a short covering. So market opened lower. Responsive buyers entered here, and they protected the market from further fall. Okay, that resulted into a short covering, and after short covering, what happened? You need to have fresh business for the market to sustain higher, and that is not there. Okay, there is no demand seen above this P high. So after some time rotations, what happens? Market will go down to look for demand. So demand already came where market demand came at the morning tail. So they will again go and check in the tail zone whether demand is available or not. So market, after breaking that VWAP, market coming back and looking into the tail. If there is significant demand, that means the early buyers who were rushing to buy or rushing to support the market from further fall at around the opening, and they are not interested to push the market higher when it returned back into the same tail of the day. Okay, when the short covering profile was in formation, we had a tail. Okay, a tail, that is your kind of a drive, then a short covering. So you have a tail. So when market comes back again into this morning tail, these responsive buyers who have rushed at the open should defend the price, and then at least they should uh, make the price to rotate inside the P shape, P loop. Okay, when market gives a dip towards the tail, they should immediately come and respond, and then they push the price to rotate inside the tail. That at least that they could do that, but here it's not happening. Market straight away going down and taking out the day low. Once the day low and the important support of around 20 to 120 has been tagged, and again there some kind of responsive buyers are coming, and they are again trying to push the price higher, and they close around the point of control, somewhere around below the POC. Okay. So at the end of the day, what you're getting is a kind of a balanced profile with a tail at the bottom. Okay, we had a small tail at the bottom and a kind of a balanced profile. This is what you're getting. At the same time, this complete value is within this composite tail. Earlier we had a tail over here, and we got a clean value. Okay, in that case, what happens? You know, market was closing at the lower end of the day. Below the value, everything was there. There was a follow through, but here the case is different. It is not closing at the lower end. It is closing somewhere around the VWAP, above the VWAP, but it is a balanced profile, and you're getting a tail here. The value was completely inside the tail. Okay, the common things here is that here the tail is getting value. Here also the tail is getting value. These are the two common things happened previously and today, and this latest profile. But the difference is that this is a neutral extreme down day closing, and this is not the case. This is a kind of a balanced profile. So we have this tail as a crucial support for the coming session. Okay, in spite of getting value in the previous composite tail, we got a balanced profile. You did not get a lower closing. We got a balanced profile. Now, what could happen on further sessions is that we could give importance to this particular tail, which was there from 20 to 120 or slightly lower, 20 to 110 or something like 10 or 12, somewhere around to 20 to 138. So as long as we don't break this zone, okay, for a daily analysis or a shorter time frame trading, as long as we don't go below this 140 to 110, okay, this zone 140 to 110, this zone is very important. As long as we hold this tail and we rotate inside this distribution, there is a fair chance for the market to go up and close this gap. We had a gap over here. We had multiple gaps. We had a gap here. So gaps in market profile are considered that we open outside the range of the previous day. That is what we call as a gap. We don't call gap between the previous day close and the current day open. Okay? We call it as a true gap. That means price opens outside of the previous day's range. We call it as a gap. So here we had a gap down opening followed by another gap down opening. Okay, now we had a tail. So as long as this tail is protected for short term, okay, for a time being, for a couple of days, we could either rotate within this balance and then slowly started go higher to close this gap. Okay, as long as this tail is protected, we will do this. Actually, we will do this. Most problem. In between, you will have some kind of resistance in between to 280, 300, 305. You will have some resistance, but the ultimate target will be this thing. Closing the gap will be your ultimate target as long as this tail is holding. Okay, this is the immediate target. And say like if you get a gap down opening, our market opens down, and then immediately this tail is being taken out, then we are in a serious trouble. Okay, this tail, if this tail goes, no, then we'll straight away come to this particular low, which is somewhere around 21 950 960 levels will be tested. Okay, 950, then again that lower levels are 900 950 will be tested. Okay, so this is a short-term view for Nifty as of now. Okay, keep a close observation around this particular tail zone. Gap down opening or opening below this, then your ultimate target is somewhere around 21,900. Okay, so everybody will be asking that whether market is going to 22. What is that? 21,500 or 21,600 and all these things. But these can be good for just a discussion purposes. But beyond a point, beyond like 200, 300 points, beyond that, you cannot trade and make money. Okay, that's the reality. Because if you have a target of 25,000 for Nifty, the 25,000 may come in any time. Okay, it may not come very fast. Okay, it may not come via tradable ranges. It may come via overnight gaps and all those things. Okay, so it's not absolutely tradable. Okay, every moves in the market are not tradable. Some moves you can trade and some moves that cannot be tradable because that move may happen via overnight positions, overnight gap or something else. Say here, this is the case on this particular day. It was good to trade because you had a gap down opening. Then there was a pullback, a probable FA. There is a clean context-based selling. You can do that on an intraday. But if you look into this particular profile, for the first 2-3 hours, it was very difficult to get a trade. Then once price, after a short covering profile, when price breaks VWAP, then there comes a good entry. So you have to patiently wait for a trade. So every these predictions of getting 25,000 or 20,000 cannot be traded as my point of view. For the next 100, 200 points is easy. Okay, you can predict that, you can decide which directions market are going to go and you can trade accordingly. Okay, you cannot trade next 500 points, you cannot trade because market doesn't go directly to 500 points. Okay, it will go like 100 points down, then there will be contra pullback of 50 or 80 points up. Then again, it will hit your stops, it will hit your trailing stop loss, then it will go. So it's not as easy as you see an EOD chart. When you look at in an EOD chart, it is very easy that you would have shorted here and you would have profit over here. But if you have traded really in your account by taking positions, it is very difficult. That what you see in chart is not as easy as what you trade. Okay, so be very, very clear in that. Okay, so this will be our ultimate target, 21,900. Beyond that, we'll discuss once that comes and test. We'll discuss what will be the further levels. As of now, this is the possibility. Okay, and weekly and all, if you see weekly, you have a kind of a double distribution profile is getting formed because of this gap inside this. We don't know. We have another 2-3 days. I think 2 more days for the profile to get completed on a weekly basis. Let's see. On a monthly profile also you can see markets. This particular month has been taken out. We have been moving up for the last 3-4 months. April low is being taken out on the previous session where you have a neutral extreme down day and it keeps on continuing down. Okay, so let's wait and watch what will be the next possible targets on monthly. Because once the weekend is over or on some, we'll discuss about this weekly and monthly levels. Now let us go to Bank Nifty. So Bank Nifty, what was happening here was we have been seeing that we got a clean down day, that double distribution down day on the previous session. Again a small, again a gap down, but when compared to Nifty, there was a larger gap, but here most of the gap has been filled actually. Very small gaps are there. Okay, most of the gap you got filled over here. Now the important question to be asked in Bank Nifty is that we had this big trend day that happened on 28th March. Okay, till around 245 somewhere around. After that, there was a big red bar, which almost kind of this is what we called as a this thing, a big overlapping bar. Okay, blanket TPOs and all these things. It completely engulfs the previous bars. Okay, previously we have been one time framing up, and we are making a kind of a short covering profile. All of a sudden, one big bar comes down and takes away the previous entire bulls efforts. Bulls are trying to build and push the market from like 47, 400 or 500 levels to they did till 300 points up. That entire 300 points effort done in for the past 3, 4, 5 hours has been distracted by one particular bar from the BS that went from say like 47, 800 till 47, 400. 400 points drop in 30 minutes. Okay, so that happened here, and on that day we had a tail zone over here, your tail zone. So what markets did on that day was, say, like we have been marking this. This why this levels why I have marked is because we had a 3-day balance over here. This is your 3-day consolidation. So that is why I have marked this 3-day balance over here. So what happened now? We came down. We came and tested this balance. After this gap down opening, we tested this balance high. Then immediately we got a bounce back. And further, there was some kind of test again. This happening in the balance. The bulls responded to stay well above the balance. Okay. I thought if they successfully come inside this balance, this entire balance will be penetrated and we may target 47,000 or 47,100 levels was my expectation when this gap down happened. And I was looking for an acceptance, a clean acceptance inside this 3-day composite. Okay, 3-day composite levels, but it doesn't happen. The market continued to remain above this 3-day balance high, and towards the end of the session, we got a big move. The last 2 candles, last 45 minutes, there was a big move from 47,500 to like 200 points move happened in the last these things, the last 2 bars. Okay, so that is the last 45 minutes. So this 3-day balance is now protected. But how long we don't know. Okay, how long we are able to give that protection. Okay, and if you ask me, why don't you consider this tail here? This is the tail over here. Why don't you consider this tail instead of why are you focusing on this 3-day balance? And the answer is very simple. That okay, the answer is simple. That this tail is there. This tail comes inside the composite. We had a 3-day balance. We had a 3-day balance followed by sorry. We had a 3-day balance followed by a breakout above the balance. And when during the process of giving a breakout, we had a tail here. And the tail, if it comes outside of the composite, I will add more weightage to the tail. But the tail is within this 3-day composite balancer. So I don't give more importance to tails within the composite, whereas tails outside the composites will be given more weightage. So this tail that is already coming inside this 3-day balancer. So we don't give more importance to this tail. So instead of that, we have given a composite weightage to this 3-day balance. So that is the reason. Okay, these are all context-based analysis. Okay, you should know which context to approach at what particular point of time. That is the beauty of market profile, and that is understood only if you practice this thing for a very longer period of time. Okay, now this 3-day balance is there. So as long as market doesn't penetrate into this 3-day balance, or else you can say that as long as this particular day low is holding. So if market breaks this day low and enters into this particular balance, 47,000 will be your immediate target. Okay, that will be done. On the upside, what you can do now on the upside, say like if we get a gap up opening or say like flat opening and this gap is getting closed, then probably we'll go and target these extension singles of this double distribution profile. We had some these extension singles are there. This is your double distribution. So morning, as I told you, we got a long liquidation profile followed by extension. So this is fresh supply coming into the market, and we got a neutral extreme. We got a double distribution trend day, and now this will be your this extension. So these are all areas where very low volumes have been traded because market did not stay there for a longer period of time, and we started coming back. We started coming down very fast. So when price goes these levels, you will get an initial rejection. So you have to look for rejection. Rejection means it should happen very fast. And if it is not happening that way, it is not rejection, it is acceptance. So when price goes and consolidates here, that means this entire DD zone is not rejecting the price. Instead of that, that is considered to be an acceptance of price. So when these single prints are accepting means we have a chance to move upside and target this upper distribution. Okay, then there comes the tail of this B profile, morning B profile. We got a tail over here, and that is also an important level to be monitored. Here you have a tail over here. Just a minute. Levels are not visible, so I'll add one more thing here. Okay, so this is the level 48, 325, 450. So you have a tail over here. Okay, this is the initial long liquidation profile tail. These also will face price will face a rejection here also. These levels. Say like we open higher, closing this gap and sustaining above 47 800 or 47 900 levels. That is important level for to be bullish. So definitely when price goes for the first time and test this 47 900, you will have an initial rejection. Okay, say like you get an initial rejection, price comes and consolidates above this previous day high. Then again they'll provide they will take one more attempt, and then if you see price comes above 47 900 and the initial rejection is being cancelled out and price consolidates over here, then that means you need to consider that this particular double distribution single prints are accepting price, so that we'll go and target the upper distribution. Okay, till somewhere around this VWAP, then further till 48 325. Again, when price goes to 48 325, there will be again rejections. And if this zone is getting accepted, then probably we'll come and close the upside gap over here. Okay, these are all the possibilities. These are we need to evaluate step by step. Okay, first step is that we need to look for rejections over here. Since we are trading down, your markets are going something like this. So whenever you are getting a pullback, you're trying to sell at this particular swing low. Same concepts over here. Whenever you are getting a pullback, you're trying to look for rejections at around 47 900. Okay, you can confirm these rejections via order flow, via volumes, and all these things. So many parameters are there for you to confirm. So once you get a confirmation, then you can go and take a trade. Okay, whether it is getting rejected or accepted, you are just supposed to take a trade there. That's all. So on the downside, if this day low goes, 47,000 is your immediate target, and if it stays below 47,000, because these are balance extremes, you have to be very careful when you are trading these balance extremes. Why? Because breakout failures can happen only at these extremes. So like market comes inside this, this entire balance will be taken out within a day. Say like we go and break this 47,026 or this balance low. Okay, if you are trying to blindly short when a breakout or breakdown happens outside of this balance, probably there is a highest possible chance that you may get trapped. Why? Because everybody knows that when market breaks out of a consolidation, there will be a lot of liquidity, fresh shorts will be coming into the market. So they can trap, and then they can trap all the shorts below this balance low, and they can come back inside the balance low, then do a opposite retracement. They'll go and target the balance extreme high. So that is also a possibility. So you need to you need to have a valid confirmations before taking an extreme shorts or extreme buy signals. Okay, that means when you're trading at the extremes, you have to be very careful. You have to confirm trades. You have to take entries only after valid confirmation. So if this 47,000 balance, you are getting an initiative selling below this balance extreme, then probably you will come and target this VWAP, which is somewhere very close to this day. This VWAP, it is around 46 760. Then ultimately this particular low, which is somewhere around 46 400, something like that. This is an extreme case when you give a breakdown, when you get a comfortable, or when you feel that we got a clean breakdown below 47,000. Okay, as long as 47,000 is there protected, then we'll rotate inside this 47,000 to 47,500 for quite some time. Okay, even if you don't get any follow through below 47,400, then probably we are trying to hold this level on the downside, and the extreme upside case is 48 500. So here 48 400, and there 47 400 and 48 400, something like that. Some 1,000-point range, they are going to whipsaw the market. They are going to go up, go down, go up, go down. Within this range, they are going to play. Okay, so I think that will be the game plan for the next few sessions, I think so. If this low is being protected, my gut feeling is saying that as long as this low is being protected, market will oscillate between this extreme and this particular low. Okay, we can just merge these profiles and you can see what happens. So like I just merge this session, because these 2 days we had a significant points move actually. If you merge these two profiles. Okay. Merge this. I don't know whether it is, there is some error is coming. I don't know why. What is that? Okay, now it's clear. Okay. Look at this, because market moved from 48,500 to something like 47,500. So like 1,000 point move have been done within 2 days. So as long as we have, now we have a strong points over here. This is your upside tail and this is your downside tail. So as long as these two extremes are there, market will continue to trade in between these extremes. This is what my bias for next few sessions, at least till this weekly expiry is there. Weekly expiry that comes out around what is it? 30th April or somewhere around the nearby weekly expiry. When is that? I don't know. See, let me check it out. Nearby weekly expiry, I think it is around 24th. Okay, so till 24th or before 24th, like expiry, they may do some wild price action. But as long as they are within these extremes, markets will be restricted to trade only between these extremes. Okay, because you have a lot of potential zones to trade over here, because you can see the volume flow over here. Okay, very less volume flow here, very less volumes are there, and again you get some gaps are there. So if you don't accept here, on next session, market will try to fill all these levels, targeting these upper extreme. Okay, then if this upper extreme is again rejecting, again it will come back and consolidate within these levels. So you need to, for a longer time frame traders, those who are trading positionals and all those things, you need to look into these two levels, one and this thing, because both side extremes are there. Whichever side extreme is getting value, that side is going to get a direction. So that is what we need to understand. Okay, so this is with respect to Bank Nifty this point of time. Weekly and all these things we'll discuss later, because weekly is not completed. We are getting a kind of a double distribution profile, but still few sessions are there for the weekly to get completed. So we'll do analysis once the week gets completed. Okay, so this is from the daily perspective. Okay, thank you for watching. We'll meet in another video after some time.